My friend just turned 60, and he's still worried about money every single day. But if he had done one thing differently 30 years ago, he'd have $3.7 million right now. I'm going to show you exactly what he did wrong, and more importantly, what you should do instead. Because here's the thing, he wasn't lazy or broke. He actually earned quite well as a freelancer, but he made one critical mistake that cost him millions. And the worst part? He was actually trying to get rich. He was working harder than most people. He was taking action, but he was doing it all wrong. And by the end of this video, you'll understand why doing less is sometimes the key to making more. So let me tell you about my friend. We'll call him John in this video for privacy reasons. John is 60 now, and when I talk to him about money, there's this look in his eyes. It's not quite regret, but it's close. It's the look of someone who knows exactly where things went wrong. Back in the 1990s, John was doing well. He worked as a freelancer, made a solid income, and had money coming in consistently every month. He wasn't rich, but he was comfortable. But John had this burning desire to get rich fast. He didn't want to wait 20 or 30 years. He wanted it now. He had dreams of retiring comfortably, of being able to support his children, and never having to worry about money again. So he did what a lot of ambitious people do. He started chasing opportunities. He'd hear about a hot stock, buy it immediately, watch it go up 5%, get excited, then watch it drop 3% and panic sell. Then he'd see another stock trending, jump into that one and repeat the cycle. He was constantly buying and selling, sometimes multiple times a day. He thought he was actively managing his portfolio, but in reality, he was just gambling with transaction fees and taxes eating away at every move. But it wasn't just stocks. John also had this entrepreneurial itch. He thought, if I could just build a successful business, I'll have the money I need to retire and take care of my family. So he started a real estate listing website, one of those platforms where people can search for homes to buy or rent. He was convinced this was going to be his ticket to financial freedom. He hired developers, but finding good developers? That was a nightmare. The ones he found were expensive, really expensive, and slow too. Projects that should have taken weeks dragged on for months. He'd pay for features that didn't work properly. He'd have to pay again to fix them. Communication was difficult, and deadlines were constantly missed. Every conversation felt like a nightmare. John poured tens of thousands of dollars into this company. Development costs alone were huge. Then there were design, hosting, marketing, and legal fees for setting up the business structure. And here's the thing, he didn't give up quickly. He worked on this for years. This wasn't some side project he abandoned after a few months. He was all in. He believed in it. He kept pushing, kept investing, kept hoping the next feature or the next marketing push would be the one that made it work. But the market was already crowded. The big players had massive budgets, established user bases, and years of market dominance. They had teams of developers, millions in funding, and brand recognition. And after years of pouring money and effort into it, the site never gained the traction he needed. Eventually, he had to shut it down. Tens of thousands of dollars and years of his life gone. But his next mistake was even more painful. Because John didn't give up on entrepreneurship, he tried something different. He heard that selling courses and books was profitable, so he created a business around healthy eating. Courses, books, meal plans, nutrition guides. He spent money on content creation, website hosting, and advertising. He ran ads on Facebook and on Google, and people clicked. The traffic was there, and people were interested, but nobody bought. And here's why. The healthy eating space was already too crowded. There were way bigger companies with massive marketing budgets. There were personalities with millions of followers who had spent years building trust with their audiences. Influencers who could post once and get thousands of sales. John didn't have a good enough strategy to compete. He didn't have the brand recognition or the audience or the social proof. And without those things, it didn't matter how good his content was. People would click his ads, land on his website, look around, and then leave. No sales, just ad spend draining his bank account month after month. Again, this wasn't something he gave up on after a few weeks. He worked on this for a long time, but it just didn't work. The market was too saturated, and he didn't have the resources to break through. And again, thousands of dollars and many years were lost. Fast forward to today, John is 60 years old, and he can't retire comfortably like he dreamed. He still has to worry about money every single day, and he can't support his children the way he wanted to. Not because he didn't make money, because he did. Not because he didn't try. He tried harder than most people. He actually gave his business ideas a lot of time. He worked incredibly hard on them, but they just didn't work. And recently, when we were talking, he said something that stuck with me. He said, "If I had the information that's available right now on YouTube in videos like the ones you're creating, I would have done everything completely different. I wouldn't be in this position." Because here's what breaks my heart. If John had just taken that freelance income, invested $1,000 a month into a simple S&P 500 index fund, and left it alone for 35 years, he'd have around $3.7 million today. When he told me that, it really made me think, because what he missed wasn't some secret opportunity. It was simply knowing where to start and having the patience to stay consistent. And that's exactly why I made a free guide called The Ultimate Investing Guide. And it gives you the exact 5 steps to start investing the right way. You can download it for free through the link in the description, or just go to griffinwise.com. It's everything I wish John had when he started. Because here's the truth. He could have had $3.7 million just by being patient and doing less. No stock trading or failed businesses, just consistent investing in time. He could have retired comfortably and been able to support his children. He could have had the financial freedom he was chasing all along. But instead, his desire to get rich quickly and his entrepreneurial ambitions have cost him everything. So what's the lesson here? Because I'm not telling you this story to make you feel bad for John, or to say that entrepreneurship is bad, or that you should never take any risks. The lesson here is, sometimes the best path to a wealthy future is the boring one. Because here's what most people don't understand about investing. The magic isn't in picking the perfect stock or timing the market. The magic is in time and consistency. Warren Buffett, one of the richest investors in history, didn't get rich by constantly chasing new opportunities. He got rich by buying good investments and holding them for decades. His secret? Patience and letting compound interest do the heavy lifting. And that's exactly what John didn't do. So if you're watching this and thinking, I don't want to end up like John, here's what you could do starting today. Start small. Even $100 a month is enough to change your entire financial future. Because it's not about the amount. It's about the habit. Pick something simple, like a broad market ETF that owns hundreds of companies. That one move instantly gives you diversification and steady growth without needing to guess which stock will win next. And for most people, this often is the best choice. Then automate it. Set it, forget it, and let time do what time does best. The less emotion you bring into investing, the better your results will be. And when the market drops, because it will, that's when your mindset gets tested. Because most people will panic and sell, but smart investors keep buying. Because every price dip is a discount on their future wealth. If you stay consistent through the ups and downs, you'll look back years from now and realize you quietly built the life John always wanted. Not by luck, but by patience. And if you want help setting that up, I made a free step-by-step guide called The Ultimate Investing Guide. It shows you exactly how to pick your first ETF, open your account safely, and make your very first investment. You can download it for free using the link in the description or by going to griffinwise.com. It's everything I wish John had when he started. Don't let another decade slip away, because the biggest cost in investing isn't a market crash. It's waiting too long to begin. You don't need to be the person who says, I wish I started earlier. You could be the one who says, I'm glad I finally did. And if you want to see exactly how to start investing with your first $100, click the video on your screen now, because that small step could be the beginning of your entire financial future.